Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 11th. My name's Eric Wilkinson, and some of you may recognize me from mainstream media as the Wolfman. But what I'm here to do is not only talk about the markets, talk about the economic picture, but how to implement options into your portfolio. That's the best way to create yield, you guys. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. And one thing I want to get out of the way as well, it's sincere thank you to anybody out there who has served for our country. I do appreciate that probably as much, if not more, than most people. I come from a military family where we've had generations of family members in the military, so I do want to thank you guys all for keeping us free. All right, anyway, let's get on with the overall economic picture. There's not a whole lot going on today. It's going to be a real light volume because of Veterans Day. The banks are going to be closed, so a lot of that volume is going to be sucked out of the markets, but we can talk about across the pond some economic picture. We got German GDP in line with expectations at negative 0.1%. They did revise last month's number down slightly to negative 0.2% from negative 0.1%. Industrial production coming in worse than expected at negative 0.4%, expected to be negative 0.2%. And construction output out of Great Britain coming in at 0.2%. That's about it for the economic data there. Like I said, nothing going to be released here in the United States because it is a holiday. All right, let's talk about the markets, and we move over to crude oil. It is off just a little bit. I think it's just a little bit too high here. Anytime it gets up close to that $59 a barrel, we start seeing some of that momentum and some of the volume coming out of those markets. So I think it's ready to start to roll back over. It was looking pretty bearish this morning with it near the lows of the day. It came down and kissed that 9-day moving average and bounced up and away from it, almost lockstep, if you will. But something to note, we've got the 50-day moving average lining up with the point of control. That's going to act as support. Now, we've been seeing this point of control really act as a magnet, drawing the market back down to it. Every time we get extended to the upside, we come back down to that $55, $56 a barrel. Now we've got a support line in there. I don't know that it's going to act as a support and resistance as much as we normally would see with something like a 200-day or a 50-day moving average, but we are going to have to keep an eye on that. I expect the market to roll back over with the lack of demand we're seeing coming out of the manufacturing sector to really test the lower boundaries. So somewhere between $52 a barrel and $55 a barrel, I think, is really the sweet spot for crude oil right now. I think anytime we start seeing these big rallies in crude oil, price at the pump starts going up, we're going to start seeing people pull back on some of the driving and things of that nature that we're going to see. Plus, we're heading into the winter, which we're going to see some of that demand for crude oil or gasoline anyway start to wane a little bit. Manufacturing sector not doing as great as we'd like to see. That's another point of contention for demand in crude oil as well, because a lot of that crude oil goes into the plastics and the manufacturing processes there. All right, gold futures coming off by almost $10, testing this 1450 that we talked about last week. I think it was going to go down there and test that area. One thing to note here is we are consistently seeing lower highs and lower lows here. So that is indicative of a bearish trend now. So we can kind of draw some lines like that as the market starts peeling away from that. Now, that being said, with the way that the Fed has been talking and interest rates and easy money with quantitative easing and stuff like that, that is going to cause a weaker dollar, which should drive demand for gold. But what we're seeing is a lot of people are pulling out of the safe havens and putting it into more risky assets like the equities, and that's what's causing some of that weakness there as well. Bonds pretty much unchanged on the day. Probably should not see a whole lot of volume or big market moves in the bonds today unless there is a crazy tweet or something coming out. Other than that, bonds are going to probably stay relatively tame today because the bank's being closed. All right, VIX not a whole lot to see there. The VIX, so let's move on to the equities. We've got the Dow off by about 115 points right now. Again, really light volume day. NASDAQ off by about 22 points. You know, we've talked about this. We are looking for a bit of a correction in equities. I think they should come back down into the value areas where the most time and volume has been spent. We're going to be losing a little bit of momentum without any further pullback, but I would expect us to at least come back down, test maybe 8,000 here in the NASDAQ, just as a slight correction in the market, maybe come back down and test 8,100 at least, break back below and give us another lift to the upside. But at this point, I think it's feeling like it's just a little bit overdone to the upside, and people are going to look to start taking some profits here in the equities. All right, we've got the E-mini S&Ps off by about 8 points. Again, that's almost unchanged, really, to be quite honest. Not a new all-time high today. The market's been pretty bearish with lack of volume going into today. But I expect probably some more bearish undertones happening throughout the rest of this week. You can see overnight inventory was very negative and short for the most part. Slight attempt on the open to flush those guys out, but just a weak move, to be honest, and that's due to the lack of volume and the institutional investors being out of the market for the most part today. That being just a retail trade and you know, the weaker hands, which isn't going to drive the markets really at all. All right, let's talk about McDonald's, because I covered some of this trade on Friday after I did the daily market commentary, so I hadn't had a really chance to talk about it. If you remember with McDonald's, you can see the market sell off here just recently, and that was on their earnings. So right here on their earnings was where I got into this trade, and I went in and I had sold the 200 puts. Well, those puts are obviously in the money now, and I'm looking to have those stock put to me, which means that I will take possession of somebody's stock at $200. Now, you can see when we're trading at 193 that is a losing trade. Well, I've done a lot of mechanical work in and around this, as a matter of fact, because I assumed that I was going to get those stock put to me. I went in and sold the 205 calls in there, so that created a bit of a strangle, right? So anything in between there, I would be profitable. That would have been good. Well, the market sold off even more, and those 205 calls that I had sold for $1.29, I bought them back for I think they were $1.29 on those. Let me just double check on here. I don't see where it's at right now. Anyway, I covered those trades. On the 205 calls, I sold them for $1.07, bought them back for 29 cents. Well, then I rolled back and said, you know what, if I'm going to be long at 200, I might as well do some dollar cost averaging with this, and sold the 185 puts in there. And I did that for a collection of another $1, and that's just all day lowering my cost basis on these types of trades. And that being said, I was able to buy those back, those 185 puts, for 6 cents. Now, all of that, lowering my cost basis on those 200 calls by, $2 or so. So 198 is right around where my break even is. I wanted to take those off because, for 6 cents or something like that, it's not really worth holding on to those short calls, just a dollar cost average. But if I start getting another correction to the downside and start maybe testing that 185 area, I'm going to go in and sell some more puts in there. And therefore, if I could put the stock, then I have dollar cost average as well. And if it bounces up in a way, then I get to keep that collection. So that's how we try and manage some of this risk, lower our basis continually on something like a stock that looks like we are going to take into our portfolios, and just completely stay ahead of this game and lower our cost basis on it, so therefore it increases our probability of success going forward. And that's about all I've done today. I'm going to be looking at some more earnings throughout the rest of this week, so keeping my powder dry and keeping some money on the sidelines to be able to take advantage of some of that. And that's about all I've got for you guys, other than If you can't take that, take it easy.